Welcome to all. This video lecture is for the benefits of the students of third semester BCom of Mangalore University in the subject Financial Accounting 3. This video lecture is the initiative of the Government of Karnataka, Department of Collegiate and Technical Education, Bangalore. In this session, numbered 38, chapter Death of a Partner, we are going to discuss treatment of goodwill. According to the Indian accounting standard, the various treatment of goodwill are discussed in this particular video lecture. First, we will discuss treatment of goodwill. In the old balance sheet, there may be existing goodwill. If there is any existing goodwill given in the old balance sheet, then that goodwill is to be written off. For writing of the goodwill given in the books of the account, that is in the old balance sheet, we have to pass a journal entry. For passing a journal entry, we debit all the partners' capital account and credit goodwill account. This existing goodwill given in the old balance sheet will be distributed among the partners in the old ratio. So this one entry we are required to pass for writing of the existing goodwill given in the old balance sheet. Now, in many of the problems, there may not be goodwill given in the old balance sheet, then this entry is not passed. This entry is passed only when the balance sheet gives an information on the asset side, the goodwill. If that goodwill is shown on the balance sheet on the asset side, then this entry we are going to pass, that is all partners capital account is debited to goodwill account, and this will be distributed in the old ratio among all the partners. Now, whenever a partner dies, the goodwill may be calculated on certain criteria. Maybe on the basis of the past profits or other basis. The calculated goodwill is to be entered in the books of the account. According to the Indian accounting standards, we have to adjust the goodwill in the capital account without opening the goodwill account. Under the Indian accounting standards, at present, the goodwill account should not be opened. We should not show the goodwill account in the balance sheet. So in order to not to show the goodwill account in the balance sheet, the goodwill which is created is adjusted in the capital account of the partners and not by opening a goodwill account. So here you have to remember, while creating the goodwill, we are not opening the goodwill account. That means there is no debit for the goodwill or neither a credit for the goodwill. A goodwill account is not opened while creating the goodwill. Instead of that, a capital account adjustment is made. So this is the procedure which is followed under the Indian accounting standard. The entry for treating the goodwill created and not shown as a goodwill in the balance sheet, the entry will be continuing partners capital account is debited to deceased partners capital account. And here we have to remember, the deceased partner's share only is created. The full value of the goodwill is not created, but we are creating goodwill only to the extent of the deceased partner's share. And this share is immediately adjusted and they are distributed to the continuing partners in their gain ratio. So on both the debit as well as credit, there is a capital account is debited and credited, and no goodwill account is debited or credited. So the entry for writing up goodwill upon the death of the partner is continuing partner's capital account is debited to deceased partner's capital account in the gain ratio. This is to be distributed in the gain ratio and not in the old ratio, but it is to be distributed in the gain ratio. Now, this treatment of goodwill we will demonstrate by taking up a problem. The problem we are going to take up is A, B and C are in partnership, sharing profits in the ratio of 4:3:1. A partner died on 30th June 2020. The firm's profit for the last 4 years are 2016 there was a profit of 1 lakh, 2017 there was a profit of rupees 50,000, 2018 there is a loss of rupees 60,000, 2019 there is a profit of rupees 10,000. The goodwill is to be valued on the basis of 2 years purchase of average profits of 4 completed years immediately preceding the year of death of a partner. The books of the account are closed on 31st December and they have asked us to pass a journal entry. This is a problem only to deal with the goodwill treatment. Usually in the university examination, you will not receive any question, a separate question on the treatment of the goodwill. But for the solution of the problems relating to the death of the partner, entering and learning treatment of goodwill is necessary. So in this particular session, we are learning how to treat goodwill. Both calculation of the goodwill as well as the entering the entry on the goodwill. So remember that a separate question may not appear exclusively on the treatment of the goodwill, but it is necessary for us to understand the treatment of the goodwill so that in the full problems on the death of the partner, a entry on the goodwill can be easily treated. So in this problem, we will first treat the goodwill. Before treating the goodwill, we have to calculate the goodwill. In order to calculate the goodwill, we need to understand certain things. What are the information which are provided in the problem? In this problem, there are three partners and their old profit sharing ratio is given. And the date of the death is also given, which is very important for the calculation. That is 30th June 2020, one of the partner named A died. And we also have been provided with the 4 different years profit. In that 3 years we have a profit and 1 year we have a loss. And the instruction to calculate the goodwill is given here. It is calculated on the 2 years purchase of average profits of the 4 completed years. So it is the average profits of the 4 completed year preceding the year of the death of a partner. So first we have to calculate the 4 years average profits. Then the 4 years average profits will be multiplied into the number of years of purchase. Then we will find out what is the deceased partner's share of the goodwill, and this deceased partner's share of goodwill will be treated by passing a journal entry. That is, continuing partner's capital account is debited to deceased partner's capital account in the gain ratio. These are the things we are going to calculate. Now first we will calculate the average profit. So first we will find out the average profits of the last 4 years. In order to calculate the average profits, you have to remember that we have to add the required number of years profit. Here the required number of years profit is for the 4 years. So we will take up the 4 years profit, that is 1,50,000, and for the third year there was a loss of rupees 60,000. Whenever there is a loss, that loss should be deducted, whereas the profits are added, and in the fourth year we have a profit of rupees 10,000. Since the required number of years is 4 years, we have taken the 4 years profit and it should be divided by that required number of years profit. In this case, it is 4 years. We will add up the profits. When we add up 1 lakh plus 50,000 plus profit of rupees 10,000, that comes to 1,60,000. Deduct 60,000 loss, that will come to 1 lakh. Now we know the total profits of the 4 years is 1 lakh. Divide by the required number of years, that is 4 years. So we get a average profit of 25,000. Now we will see the calculation of the goodwill. That is, the total goodwill is equal to average profits of the required number of years. In this case it is 4 years, into the number of years of purchase, that is, in this case it is 2 years. So if we substitute this, that is, we got the average profit of 25,000 into the number of years of purchase, that is 2. So we get 25,000 into 2, that is 50,000. So this we have to remember that it is the total goodwill. Total goodwill means total goodwill of the firm. But we are required to, under the Indian accounting standard, required to create only to the extent of the retiring partner's share. So we need to calculate what is the deceased partner share of the goodwill. So that can be found out by total goodwill is equal into deceased partner share in profits. So total goodwill is 50,000 into the deceased partner share is 4 by 8. So we get 25,000. So this is the deceased partner share of the goodwill. So total goodwill multiplied into the deceased partner's share of the goodwill, we will get the deceased partner share of the goodwill in the form. Now, while passing the journal entry for recording the goodwill, the entry is continuing partners capital account is debited to deceased partners capital account, and continuing partners capital account is debited with the deceased partner share of the goodwill in the gain ratio. So we are required to calculate the gain ratio. How to calculate the gain ratio? For the calculation of the gain ratio, there is a formula, that is new ratio minus the old ratio. So if the problem states new ratio, then we can easily find out the gain ratio by gain ratio minus old ratio. But many of the time new ratio is not provided in the problem. Whenever in the problem new ratio is not provided, what we can do? We can assume that the gain ratio is the same as the old ratio which was existed between the continuing partner. Here we have to remember that gain ratio will be calculated only for the gaining partners. Who are the partner gains? It is the remaining partner. The share of the deceased partner is gained by the remaining partners. So that is why gain ratio will be calculated only for the remaining partners. So whenever there is a lack of information with regard to the new ratio in the new firm of the continuing partners, then we have to assume that it is to be the calculated as same it was existed before. Now the old ratio was 4:3:1. In that, partner A died. So if partner A goes out, then what remains, their share remains is 3:1. So this 3:1 is the ratio between the remaining partner. This ratio itself is considered as the gaining ratio. We will now pass a journal entry for recording the goodwill, that is, continuing partners capital account is debited to deceased partners capital. Who are the continuing partners? B and C. And who is the deceased partner? A. So continuing partners capital account is debited by substituting the name of the partners here. So we can write B's capital account is debited, and there is one more continuing partner, that is C's capital account is debited to deceased partner, that is in this case to A's capital account. Now A's capital account will be credited with the amount of the deceased partner's share. We have found that deceased partner share of the goodwill is 25,000. Now this 25,000 will be distributed among the partners in the gain ratio. So just now we found the gain ratio as 3:1. So this share of 25,000 of the deceased partner will be shared among the continuing partners in gain ratio. So 25,000 into 3/4 will be the share of the B. 25,000 into 1/4 will be the share of C. So we get 18,750 for B and 6,250 for C. Now we'll pass the entry as B's capital account is debited 18,750, C's capital account is debited 6,250 to A's capital account 25,000, being the deceased partner share of goodwill adjusted in gain ratio. So this is how we have to solve the problem. Now we will take up the second problem. The problem runs like this. X, Y and Z are in partnership sharing profits in the ratio of 1/2, 1/3, 1/6 respectively. X died on 30th June 2020. The firm's profits for various years were 2016-17 rupees 12,000, 2017-18 rupees 8,000, 2018-19 rupees 7,000, 2019-20 rupees 9,000. X and Y decided to share the profits and losses equally in future. The deceased partner share of goodwill is to be valued at 1/2 of the net profit credited to his account during the last 4 completed years immediately preceding the year of death. There is a change from the last problem. In the last problem, we have asked to calculate the goodwill on the basis of the average profits of the last 4 years. But here they have given that it is last 4 completed years. They have not used the word average. So there is no need to calculate the average profit. So that is a change from the last problem. And finally it is said that books of the accounts are closed on 31st March. And there we are required to pass a journal entry. Again I am reminding you that there will be no separate question exclusively on the preparation of the passing goodwill journal entry. But this is required for our understanding while solving the problems on the death of a partner by incorporating all the adjustments. So first of all, we will see instead of the average profit, here they have not asked to calculate the average profits, but they have used 4 completed year of profits. So we will first find out 4 completed year of profits, that is just add 4 years profit, that is 12,000, 8,000, 7,000, 9,000. So the total profit comes to 36,000. So only change here is that instead of the calculating the average profit, we have just found out the total profit. In the problem, they have not specified to calculate on the basis of the average profits. So since the average word is not used, we have found by calculating the total profit. So the total profit is 36,000. We will calculate the deceased partner share of the total profit. This is deceased partner share of the total profit. So the total profit we calculated is 36,000 and deceased partner share is 1/6. So we get 6,000. 36,000 into 1/6 is 6,000. Then we will find out the deceased partner share of the goodwill. It is given that in the problem, deceased partner share of the goodwill will be calculated on the basis of 1/2 of the 4 completed years of the partner. So in that deceased partner's share of the total profit, we found 6,000. And if you multiply into 1/2, which is given in the problem, we get 3,000. So in the question, it is mentioned that the deceased partner share of goodwill is to be valued at 1/2 of the net profit credited to his account. Credited to his account during the last 4 completed years immediately preceding the year of death. So this sentence says that 1/2 of the net profit credited to his account. So first we are finding out the total profits of the 4 years. Then we are finding out his share of the profits of the total profits of the 4 years. Then we will find out what is the 1/2 of the his share of 4 years profit. Then we are going to get the goodwill. So total profit in the firm, when we added up, we got 36,000 into his share. His share is 1/6, so it is 6,000, and his share of goodwill will be calculated as 1/2 of his share of 4 years total profits of the firm. So that comes to his share of the total profit is 6,000, and they have in the problem it is said that 1/2, so it is 3,000. Now we will calculate the gain ratio. For calculating the gain ratio, formula is new ratio minus old ratio. The new ratio in this problem, it is given, it is said in the problem that the new ratio will be equally in future. So they have said that the new ratio will be shared equally in future. New ratio will be shared equally in future. That is, there are 2 remaining partner. Equally means 1:1. That is 1/2 and 1/2. Then the old ratio is given in the problem. So if old ratio is deducted from the new ratio, then we get the gain ratio. So if you see the old ratio in the problem, it is given in the form of a fraction 1/2, 1/3, 1/6. Out of this, X died. That means the first partner is deceased and the remaining partners are Y and Z. If you see the denominator of the Z is 6, so we can make it equal by rewriting. So the given fraction can be rewritten by taking the common denominator. In this case, if you see the fraction 1/2, 1/3 and 1/6, common denominator can be taken as 6, and we can rewrite as 3/6, 2/6 and 1/6, or the ratio will be 3:2:1. Now we will calculate the goodwill, that is new ratio minus the old ratio. The remaining partner Y, the new ratio is 1/2, whereas the old ratio is of Y is 2/6. 1 by 2 minus 2 by 6. Take a common denominator 6. So 2 how many times? That is, if you multiply 2 into 3 times, we'll get 6. So write in the numerator 3 minus, and 6 how many time? 1 time. So 2 into 1 is 2. So 3 minus 2 is 1. Denominator 6. So the gain ratio of the y is 1 by 6. Whereas gain ratio of z is 1 by 2 minus 1 by 6. That is, the common denominator is 6. So 2 how many times it goes? 3 times. So 1 into 3 it is 3 minus 6 how many times? 1 time. So 1 into 1 is 1. So 3 minus 1 is 2. 2 by 6. So the gain ratio will be between the continuing partners is 1 is to 2. 1 by 6 and 2 by 6, that can be written as the ratio is 1 is to 2. Now we'll write the journal entry. The journal entry is continuing partners capital account is debited to deceased partners capital account. Here deceased partner is X. So the remaining partner are Y and Z. So we will write the entry Y's capital account is debited. Another remaining partner is Z. Z's capital account is debited. To the deceased partner, in this problem deceased partner is X, to X capital account. So Y's capital account debited, Z's capital account is debited to X capital account. Now the amount is credited to the X capital account is X share of goodwill that we calculated as 3000. So 3000 will be distributed in the gain ratio. Gain ratio we found 1 is to 2. So for Y 3000 into 1 by 3, and for Z 3000 into 2 by 3. So we get 1000 for Y and 2000 for Z. So we can write Y's capital account is debited with rupees 1000. Z's capital account is debited with rupees 2000. To X capital account is credited with rupees 3000. Being the deceased partner share of goodwill adjusted in gain ratio. Now we'll take up the third problem. X, Y and Z are partners sharing the profits and losses in the ratio of 5:3:2 respectively. Y died on 31st March 2020. The date of death is 31st March 2020. It is decided that the profit sharing ratio between X and Z will be 5:3 in future. The books of the accounts are closed on 31st March. The goodwill is to be valued at 3 years purchase of average profits of 3 years up to the date of death. The profits for last 3 years are rupees 10,000 for 2017-18 and rupees 20,000 for 2018-19, rupees 30,000 for 2019-20, and they have asked to pass journal entry. I will understand the problem. In this problem there are 3 partners X, Y and Z, and the old ratio is given in the form of a ratio, that is 5:3:2. whereas Y died on 31st March 2020. And it is said that it is decided that the profit sharing ratio between X and Z will be 5:3 in future. So the new ratio is given in the problem. The books of accounts are closed on 31st March. So one observation here, Y died on 31st March. The books of the account is also on 31st March. The Y died on the same day as the books of the accounts are closed. So this is the change from the last problem. Y died on the same day as the books of the accounts are closed. The goodwill is to be calculated at 3 years purchase of the average profits of 3 years up to the date of death. So here it is given that goodwill is to be valued at 3 years purchase of average profits of 3 years up to the date of death. The profits for the last 3 years, rather the up to the date of death, are rupees 10,000 for 17-18, rupees 20,000 for 18-19, rupees 30,000 for 19-20. So we are required to pass the journal rate. First, in order to calculate the goodwill, we will find out the average profits of the 3 years. So 3 years profit is given. So we will find out the average profits of the 3 years. So that can be found out by total profits divided by the number of years of profit. So the total profit 10,000 plus 20,000 plus 30,000. That comes to 60,000. If we divide by the number of years of profit, that is 3 years, we will get 20,000. So we will calculate the total goodwill, that is average profits of 3 years into number of years of purchase, that is 20,000 into number of years of purchase. In this problem it is given as, so if we see the problem, number of years of purchase is given is 3. We are required to calculate for the average profits of 3 years plus the number of years of the purchase is also given as 3 years. So that is the average profit we got is 20,000 into 3 times, that is number of years of purchase. So we get 60,000. Next we will find out the deceased partner share of goodwill. Deceased partner share of goodwill is equal to total goodwill into deceased partner share in profits. Total goodwill we got in the previous slide, that is 60,000. So 60,000 into deceased partner share is 3 by 10. So that is 18,000. So the deceased partner share of goodwill is 18,000. Now we will calculate the gain ratio. Gain ratio can be calculated as new ratio minus the old ratio. Deceased partner is Y. The remaining partners are X and Z. Gain ratio of X can be calculated as is new ratio is given in the problem. The new ratio is provided in the problem is 5:3 new ratio, whereas the old ratio is 5:3:2 of X. New ratio is 5/8 of X. Old ratio is 5/10. So 5/8 minus 5/10, if you take the common denominator LCM, that we get 80. 8 how many times goes in 80? It is 8 10 times. So 5 into 10, it is 50. Then 10 how many times it goes in 80? It is 8 times. 5 into 8, it is 40. So 50 minus 40 is 10 divided by 80. So gain ratio of X is 10/80. Then gain ratio of Z, old ratio is 3/8 minus 2/10. If you take LCM, it is 80. 8 how many times goes in 80 is 10 times. 3 into 10, it is 30. 10 how many times it goes in 80? It is 8 times. 2 into 8 is 16. So the remaining 30 minus 16 is 14. 14/80. So X and Z, we got the gain ratio 10/80 and 14/80. So the gain ratio between the continuing partners will be 10:14. If we further simplify, it goes in 2. 2 5s are 10. 2 7s are 14. So new ratio can be simplified as 5:7. So here continuing partner account is debited. In this problem, X capital account is debited. Another continuing partner is Z. Z's capital account is debited. And credit is given to the deceased partner. In this problem, it is Y. Y's capital account is credited. First, we have to credit the Y's share of goodwill, that is 18,000 is the deceased partner. This 18,000 will be distributed among the continuing partner in their gain ratio. We found out the gain ratio, that is 5:7. So 5/12 and 7/12. 18,000 if we multiply into 5/12, we get 7,500 for the X. 18,000 if you multiply 7/12, we get 10,500 for Z. So the entry will be X capital account will be debited with 7,500. Z's capital account will be debited with 10,500. To Y's capital account is credited with 18,000, being the deceased partner share of goodwill adjusted in gain ratio. So with this, we come to the end of the session number 38, treatment of goodwill according to the Indian accounting standard. On the topic of death of a partner, I thank all of you for watching this video. Thank you very much.